Hi there, it's Trisha, and I wanted to go over a couple trendline break setups that occurred on Thursday, the 28th. A few people asked me if I wouldn't mind doing that, so I sure don't. So that's what we'll be going over today. If you'd like to check out the setups, you can go to www.easyemintrade.com. And for those of you who have purchased the ebook, I did send out a revised squeeze setup and also an additional setup that we can use in range bound days and times. So if you didn't receive that, just shoot me an email and I'll make sure that you get it. And anyway, you can go to www.easyemintrade.com if you'd like to check out the setup. So what you're looking at is our longer tick chart, and that's what we've been taking the trend line breaks off of. And I've got the trend line drawn in here in blue. This one is green. And the reason why I drew this in green is this is one that I just didn't even consider. And to be quite honest, when I did the back testing a month or so ago on trend line breaks, what you're looking at here is the close and the low from the previous day. And in back testing, those areas typically were ignored when we had trend line breaks. And like if you look at a smaller tick chart or time frame, you'll see that these, the price gets hung up in those areas. Where here, when you're looking at it through a broader view, it appears that it slices right through there, when in reality you did go sideways here for a little while, but you wouldn't have been stopped out. So I have to get in the habit of just ignoring those things when I'm taking a trend line break, because obviously you can see that this went on to be a huge winner. You would have got +2, +4, and if you were trail stopping out using half a point below each bar, you wouldn't have been stopped out until here, and you would have been trail stopped out at +6. So I just have to get over old habits of not taking anything around those reference areas when taking off the longer tick chart for trendline breaks. We had somebody in the room who doesn't even put those on his longer tick chart, so he doesn't get persuaded not to take something by looking at those things. So, I'm going to have to just remember just to ignore those. And it's a hard habit to break if you want to know the truth. So, anyway, this should be enough to teach me right here. Because obviously that worked out to be an awesome trade. Everything's in line. You've got your trend line break, you've got your indicator in alignment, so it's good to go. Then two trades that happened at lunch today. You actually had this trend line break here, and that would have went on to be a really nice trade as well. And then you had this trend line break here that went on to be a really nice trade. And this one here, if you were to enter in a half a point above this bar, the stop would have been pretty large. But if you look at your smaller tick chart, you would have had a squeeze setting up at the same time. So you have your squeeze firing off, you've got your indicator in alignment here, and obviously everything's in alignment on your longer tick chart. So you could have taken the entry that was occurring at the same time off the smaller tick chart if you do trade at lunchtime. And it's just one of those things you think, oh well, I'm going to trade during lunch because I'm missing all these trades, but then there are days where you don't. Volume does typically get lighter during lunch, and so it's just a personal choice. If you want to trade during lunch, you absolutely can. There's no reason why you can't. It's a personal choice. So you would have had two great trend line break trades during lunch, or a squeeze trade as well. So again, totally up to you. And this is a trend line break that occurred after 3 that afternoon. And the stop was going to have to be really large, so we passed on that. But if you wanted to take it, you would have gotten, if you entered into the low of this bar, or a half or a quarter under that bar, the most that you would have gotten was probably +1 or thereabouts. But not anything that we were willing to take because the stop was so large. Um, so anyway, that is how the trend lines break works. Typically, when you enter, you're entering in a quarter or a half above the bar that breaks the trend line, and then your initial stop is usually a half below that bar, and then you can trail your stop up a half a point under each bar as it progresses. And some people are opting to manage their trade once in off of a smaller tick chart. That, of course, is a personal choice, and you can certainly do that. So anyway, you can go to www.easyminitrade.com and check those out.